All right, today we're going to crack open the code behind, well, basically everything. We're talking centuries of commerce, finance, and yeah, even our entire global economy. It all comes down to a system of perfect, elegant balance.
I mean, it's a huge question, right? Think about it. Trillions of transactions are zipping around the globe every single day. How does it all add up? How do we even begin to track where everything is? Well, the answer is this surprisingly simple idea that came about hundreds of years ago, and it works so well we still use it for, well, everything. Let's see how it manages to tame all that chaos.
So, you gotta understand, before this system became the standard, tracking money was a total mess. Seriously, imagine trying to run a business by just stuffing receipts into a shoebox. It's chaotic, you're gonna make mistakes, and you have absolutely no idea if you're actually making money or just heading for disaster.
But then, out of all that chaos, came this beautifully logical solution. We're talking about the double entry system. And trust me, it's way more than just a method for bookkeeping. It's more like a scientific way of seeing the full story behind every single dollar that moves.
Okay, so here's the core idea, and this is super important. I need you to forget everything you think you know about the words debit and credit from, like, your bank statement. In the world of accounting, they're just two sides of the same coin. It's almost like physics, you know? For every action, there's an equal and opposite reaction. Every single financial transaction has two effects, always.
The whole system is built on this one unbreakable rule of balance. Picture a scale. On one side, you have assets. That's all the stuff a business owns. On the other side, you have the claims on those assets. So what it owes to other people, which we call liabilities, and what the owners themselves have invested, which is called equity. This whole system is designed to make sure those two sides always stay perfectly equal.
And this is how it works in the simplest terms. Just think of it as a transfer of value. One account receives a benefit, that's the debit, and another account gives that benefit, that's the credit. So let's say you buy a coffee for your business. The cash account gives the money away, right? So it gets a credit. The expense account receives the benefit of that coffee, so it gets a debit. See? Two sides. Simple as that.
Now, to make all of this easy to see, accountants use this super simple diagram called a T account. And yeah, it is literally just a big letter T. The left side is always for debits, and the right side is always for credits. It's the basic building block for keeping every single transaction organized and making sure the two sides stay straight.
So let's look at the actual rules that make this system practically flawless. It all comes down to three simple, totally non-negotiable principles that make sure those financial scales always stay level.
So it's all based on these principles. First, the layout is fixed. It never changes. Debits on the left, credits on the right. Got it? Second, and this right here is the magic key, every single debit must have a perfect partner, a credit of the exact same amount. And because of that perfect pairing, the system automatically tells the whole story, which keeps that scale perfectly level all the time.
Okay, so why bother with all this? Why does it even matter? Well, it turns out that sticking to this simple discipline unlocks a massive number of advantages that are pretty much essential for running any successful business, whether it's a tiny corner store or a huge global corporation. And hey, we're not just talking about a couple of minor perks here. The real power of this system is in the results. Maintaining this perfect balance gives you at least 10 distinct, proven advantages, from catching errors to making way smarter decisions. Let's break down some of the biggest ones.
All right, first up, accuracy and control. Because debits must always equal credits, it is incredibly easy to spot if something is wrong. If the two columns don't add up, boom, you know you have an error somewhere. This simple, built-in check makes the records unbelievably accurate, and it also makes it much harder for any kind of fraud to go unnoticed. It really builds a foundation of trust.
Next, this system gives you incredible insight. I mean, because you're recording every single piece of every transaction, you get a complete, crystal clear picture of your financial health. You can calculate your exact profit or loss. You can see your true financial position at any given moment. And with that kind of clarity, well, you can make much smarter, better informed decisions about the future. And finally, there's credibility. This isn't just some random method somebody made up. This is the global standard. Banks, investors, tax authorities, they all trust records kept this way. Why? Because the information is seen as scientific and reliable. It's organized, it's easy to access, and it allows you to clearly compare performance over time. Basically, this system speaks the universal language of finance.
So when you just step back and look at it, it's pretty amazing.
This system, based on just a few simple rules of balance, has been the bedrock of modern economics for over 500 years. It endures for one simple reason. Its logic is just perfect. It's a real testament to the lasting power of a simple, truly elegant idea.
When it comes down to it, it all boils down to this one idea. Every debit has a corresponding credit. That single, simple rule is the engine that drives accuracy, helps prevent fraud, and gives us the clear financial picture our complex world needs to function. It truly is the heartbeat of commerce.
So, I'll just leave you with this thought. A system this simple has been quietly powering our entire world for centuries. It just makes you wonder, moving beyond finance, what could that kind of perfect balance create in your world, in your work, or maybe even in your life? Something to think about. Thanks for joining me.